What is up, guys? It's Scott with Never Hedge, back for another HCMC update. Looks like we are continuing our downward trend that we saw starting yesterday with another step down to the 0.0014 mark. Not great, but I did hear an interesting thought on this yesterday from someone on Twitter saying that, if we take a little bit of a step down before the rights offering, that'll actually work in our favor because that'll decrease the volume weighted average price. So we would get an even greater discount if you're planning on partaking in the rights offering. So, figure if the VWAP is down to so say we take a step down to 0.0012 or 13 by the end of the week, which is entirely possible. Then you would get an extra 25% decrease in share price if you wanted to buy another 25% of their stock. Not the end of the world. It only sucks if you're planning on selling in the next couple of days or so, but I do think that the price will go back up. Next, we had HCMC release their earnings report last night, and we're going to get right into that next with their nice little 10Q they gave us. So their current assets are pretty solid in the $7.3 million mark. And the total assets are sitting at close to $14 million. We have liabilities of close to $6 million in the $5.9 million range. For 2020, it was $9.6 million in liabilities. And for 2020, they had $11.8 million in assets. So overall, a positive upward trend there. And if they end up raising anywhere close to $100 million in this rights offering, that's huge. That's going to be 8 times their current net assets that they're going to raise from this stock offering. Even if they don't hit essentially they hit the lottery on the $1.7 billion settlement, even with that $100 million, they can do a lot to grow this business. If they raise $100 million, they will not be dependent on winning the court case that we're all so excited about. They can expand into a lot of other markets with $100 million if their current net assets are sitting at 13. All right, let's go into the debts. So net loss for Q1 2021 was right around $700K. They do have a fair bit of debt, but I'm not super worried about it. And they are sitting on $3.064 million in net cash provided by financing opportunities, one of those being an issuance of stock. That is all good there. Big increases in the cash and cash equivalents from Q4 2020, sitting at an extra almost 2.4 million in cash and cash equivalents from just a couple of months ago. That's pretty nice for them. Total revenues were down a little bit from this time last year, but part of that I'm sure is due to the pandemic. Looks like they took a large hit in their e-commerce business, but they added wholesale grocery to their balance sheet, which they did not have at that time last year, and wholesale vapor, I guess if you can call that adding it, with $42 added to their balance sheet. So here we are getting into their debt. Looks like a large decrease in the amount of debt they are holding, which is very good. Looks like they had they got 2 draws of the PPP loan. Very nice for them. They should get that completely forgiven as long as they're not fucking buying Teslas with it. And they're using it to pay their employees. We have some loans. Looks like they paid off a bit from Q4 last year. Looks like they paid off almost $70K. But overall, big decrease in the amount of debt they are holding. And we have a little bit of a decrease in revenue here. Q1 2020 to Q1 2021. Not a huge concern, though. As I said before, it's probably due to COVID and other restrictions and things like that. People maybe not be vaping as much, or more likely to be getting groceries delivered. I don't know if they have a grocery delivery service, but that seems to be the trend, at least in my area, is people getting groceries delivered. But if we go down here, it looks like they're actually in a better position than they were last year. If we go, there's $696,258 in net loss versus $691,294 from last year. So they they're only at a net loss of $4,964 despite having $600,000 less in net sales. So that is promising. Again, probably due to the decreased debt load. Net cash has increased quite a bit, obviously, as stated before, and their cash percentage of total assets has increased just about fivefold from last year, which is excellent. So that's pretty much going to do it for this one, guys. Thank you so much for watching, and I will certainly update you as I find more on HCMC, as more documents get released and things like that. And I'll see you in the next video.